Good morning, everyone. I'm Diane Wilkins. I'll be the moderator this morning. I hope you're all able to see from their seated positions who joins us on the panel. Let me first go through a quick introduction of everyone in front of you, and then a few introductory remarks about what brings us here, and then we'll begin with the session. So thank you all. Again, I'm Diane Wilkins. I'm CEO and President of Development Finance International, Inc. We're based in Chevy Chase, Maryland, Washington, D.C. To the far right, Dominique Carreri, who's Group Managing Director from UAP Holdings, and then Timothy Noonan from Cargill, Black River Asset Management, Philip De Leon, as well from Washington, Director of International and Federal Affairs for AGCO Corporation and a sponsor of the program, and Herbert Wigway, to my right, Group Managing Director of Access Bank, and also a sponsor and also has a booth outside with a colleague there for you to meet and talk to. So thank you all. I'm going to go ahead and sit down. I hope you can see us. If not, would you just let me know for the back and we'll do our remarks standing up, all right? So I am really pleased to be here. I'm with one of the sponsors of the program. I'm on the board, in addition to my corporate work, on the board along with Philip De Leon of the Corporate Council on Africa, one of the co-sponsors. Corporate Council is really interesting and very involved in the collaboration with MIT since we represent about 85% of U.S. investment in Africa. Those are the members of the Corporate Council. It's a membership-driven organization comprised of both U.S. companies as well as now a number of very key African members, such as the Dangote Group, UBA Bank, Ares Holdings with Tony Alamelu, TransCentury with Gachao Kiyuna, and also South Africa Telecom. So we're really pleased with the initiative and the momentum built with MIT and really pleased to be here. What I want to offer up to you is to take advantage today, in the next hour, of what we just heard from Ashish and weave it in with some comments that I've been listening to over the last few days and participating in the World Bank Group spring meetings. To a person, over a day and a half focus on Africa, day and a half, of course, the World Bank covers the world, so a day and a half on Africa was fairly remarkable. To a person, the speakers acknowledged the growth on Africa, they acknowledged the opportunity on Africa. To a person, speakers, luminaries such as Michael Bloomberg, Larry Summers, Ban Ki-moon introduced a session yesterday, Margaret Chow, head of the World Health Organization. Now, to a person, folks are acknowledging the opportunity in front of Africa and in front of potential investors for Africa. No one, interesting, of this group that I've listened to, and as Ashish echoed, there's not a single person at this moment who's speaking anything but challenge and opportunity. So what I wanted to invite of the panelists, as you introduce yourselves, you bring to this gathering here experience in the insurance industry, in the banking industry, the investment industry, the agricultural industry. As you introduce yourselves, please, and to give a few 4 to 5 minutes about your corporate interests on the continent, can you talk to the opportunity in the sense that what are you seeing as your major challenges and how are your activities addressing those challenges? We'll then go to some questions that I'll moderate, and then in the last 20 minutes, please, we'll take questions from the floor. So why don't we go ahead and begin. Dominic, would you like to kick us off at the end of the table there, please?
Thank you very much. It's a great honor to be here in Boston. Just by way of introduction, my name is Dominic Chiari. Fortunately, my name was misspelled, so that's K-I-A-R-I-E, just in case I plagiarize somebody else's name. Now, I work for a group called UAP Holdings. UAP Holdings is a Pan-African financial services group. Our main focus is insurance. We currently own 12 businesses operating in 6 markets in Africa. That's Kenya, Uganda, South Sudan, Rwanda, DRC, Tanzania. Now, we've got a very long history in operating in Africa. The group was established in the 1920s but in the mid-90s, it became a locally wholly owned group. So the intention is to create a very strong Pan-African financial services group, taking advantage of opportunities in insurance, investment, and also property development by expanding into key selected markets in Africa. Now, in terms of our plans is that every 18 months, we intend to enter into a new market. The last 3 years, we've entered into 3 new markets. This year, we plan to make an acquisition to a market in Southern Africa. In the next 2 years, we'll also be entering a market probably in West Africa. So the big question for us is, why should we be going into these markets? Number one, the opportunities are huge. The opportunities are very, very huge. And the vision of some of the anchor shareholders is, can we build a global business in Africa? So my role as part of a senior leadership team is to actualize our vision by building very, very strong Pan-African financial services group that can stand held over shoulders with the big brands you hear, the Goldman Sachs of this world, but it's a business which is homegrown, taking advantage of opportunities. Now, just to mention very quickly, we operate in the insurance space, as I mentioned earlier. Insurance penetration in Africa is very low. I think it's about 3%. If you exclude the big markets like South Africa and the North, is 1%. Question is, why is the penetration rate very low? Couple of reasons. One is the business model that has been adapted over the years, in our view, or in my view, needs to change. We, as a corporate, needs to be very relevant to make sure that we deliver products that are in line with what the market wants. So there's a lot of work which needs to be done to make sure that the business model and the products are relevant. Number two, the mode of distribution, financial services, in the last 20 years, the traditional models are becoming, they're actually very, very expensive. By the time financial products reach the market, they're already expensive. Just to give an example, banks predominantly use branch networks, which is very expensive. Insurance use agents. Now, for the last 5 years, we've seen a very huge revolution in technology. Mobile technology has really helped to make it very easy to distribute financial products. I'm sure you've all heard about M-Pesa in Kenya, where a lot of the unbanked population now able to access financial services through M-Pesa. So it is the same. I think insurance is lagging behind, but we're working very hard in my group to make sure that we can start leveraging on those solutions to make sure that the access to insurance products and services are enhanced. So all in all, we see a great opportunity. It's definitely a challenging market, no doubt. We've been operating in South Sudan since 2006. When you entered there, our staff was staying in containers. There were no hotels. I'm sure some of you who've been to Juba, you know how the town is. But we saw the opportunity. I mean, the vision of our founders, we saw a very great opportunity. Our business broke even the first year. Right now, on the property development side, we're building the largest building in South Sudan, in Juba. It's a 15-story development. We're currently negotiating with one tenant who wants to take the entire building. We completed 15 two-bedroom developments in Juba. They're being leased for about $10,000 per two-bedroom apartment. Probably it's more expensive than here. We are doing a 31-story development in Nairobi. We just completed a 250,000 square feet development in Uganda. So great opportunities in the financial services space, and what we're trying to do at UAP is to make sure that we position ourselves to take advantage of those opportunities. Thank you.
Thank you, Dominic, very, very much. I appreciate the overview. Tim, would you give us an overview of your business at Cargill and Black River Asset Management, please?
Sure. So first I want to thank MIT and PIA for inviting me and my esteemed panelists here, including Diane. Cargill is a family-owned company. We've been in operation for about 150 years. We have about 140,000 employees around the world and about $130 billion of revenue. So if not the largest food company on the planet, then certainly one of the largest. I represent a group called Black River Asset Management, which is a large hedge fund and private equity vehicle that Cargill seeded about 10 years ago, but which today manages almost $7 billion of capital, mostly for global institutional investors. These would be university endowments and pension funds, some sovereign wealth funds as well. Today we have about $1 billion of that $7 billion allocated to a global emerging markets food-focused investment strategy. And as of last week, with the launch of our next fund, a $700 million fund, we have allocated Africa as a core geographic focus for us over the next 10 years. Africa for Cargill has been a focus since 1981. Today in Africa, Cargill has about 4,000 employees in 10 different countries across a number of different business units, trading important commodities like cocoa in Ghana and Nigeria, cotton in Zimbabwe and Zambia, originating a variety of maize and soy crops in southern Africa, participating in the animal nutrition business across East Africa, where Cargill now is the largest animal nutrition provider globally, providing ocean freight into and out of Africa, risk management services, including hedging of currencies and commodities, a whole gamut of opportunities across these various geographies. So we have a unique lens, I think, being a global company into the kind of partnerships that Ashish was talking about being the future for African development. We're not as local as some native African companies, but we want to bring these global best practices in partnership and collaboration to partners in Africa, entrepreneurs who are building businesses in sectors that we're already in or in adjacencies or the white space that we'd like to help them grow on the continent. For Black River, that means we're focused on about 8 countries out of the 54 in Africa. They're the traditional 8 that, from a macro standpoint, are more stable. Currencies are less volatile. We think the macro conditions in terms of population growth and urbanization are attractive. There are rising middle incomes, which spurs convenience spending on food. But there's still an opportunity in the very core segments like protein production as consumers move from vegetable proteins to animal proteins, things like poultry or dairy. There's an opportunity to dramatically change the efficiency and productivity of these industries. And so the challenges that we see are typically threefold. They relate to management, they relate to capital, and they relate to technology. And as a private equity fund that's focused on one particular industry, we think we can be differentiated in a market where there are a lot of generalist funds. There's both smart money and dumb money, there's international money and local money, but by and large, these funds are doing telecom one day, banking another day, infrastructure a third day, agriculture at the end of the week. And that's not our view for the best way to accelerate growth on the continent. So with that being said, I'll let my other panelists introduce themselves, but we'll get into some more details, I think, on food and agriculture throughout the next few minutes.
Tim, thank you very much. And now we'll hear from Philip De Leon from AGCO Corporation.
Hello, everyone. It's a pleasure to be here, and thank you for being here on a Saturday morning. I'm with AGCO Corporation. It's a company you may not know, but it's a Fortune 500, and it is a U.S. leader in the manufacturing of agricultural equipment, tractors, combine, but also grain storage, and equipment to raise chicken and pork. For those of you who are from Africa, you may recognize the brand Massey Ferguson, which is all over Africa. We do tractors, and that's us. We are very active in Africa and have an aggressive strategy for Africa. We've done multiple things, starting from the north. We're talking about Africa. That also includes North Africa. We have a joint venture in Algeria where we manufactured 1,000 tractors last year under the brand Massey Ferguson for the Algerian market. And as we go down, if I go back all the way to South Africa, we have our regional headquarters there. We also have a spare part warehouse, because if you're going to sell equipment, you also need to provide maintenance and service. And so we have a spare part warehouse. It was a large investment to cover all the south of Africa. I'm not saying South Africa, because South Africa is not Africa, just like New York is not the US. It's just one country. And I'm talking about Africa today, but I do recognize that each country is different, and within our company, we understand that. We don't amalgate everything and see it as one. Every country is a different reality. We are also doing a model farm training center in Zambia, because there's no way you're going to develop Africa without training. We talked about education earlier, but education is nice, but you also need vocational training. We're putting a model farm, meaning we're having a farm where equipment is on display and used so that farmers can see how to use equipment, but also all the technologies that goes with it, seeds and irrigation, fertilizers, etc. And we'll put a training center where we'll invite partners to come and provide training on how to use seed, how to use irrigation, fertilizer, to optimize the use of agriculture and all the tools that exist. Our goal is not to teach Africans how to farm, they know, but it's to help them sort of do a leapfrog, or as one of my colleagues would say, a major jump forward instead of going through the steps that Brazil, the United States, or Europe went through. Just let's take you multiple steps ahead so that you don't have to spend a lot of time understanding how to move forward. Now, regarding the challenges, and also somebody spoke about Nigeria today. I've been to Nigeria, and we're working with Ekiti State to put a training center in collaboration with the local government. So the challenges, it's always the same. You will hear things like financing, etc. One thing I'd like to bring to your attention, because I'm a practical person, is follow-up. You can talk about administration, red tape, corruption, financing, infrastructure. Okay, you will hear that. You won't hear too much people talking about following up. In my experience working in government before, the Department of Commerce, and now in the private sector, the main challenge is to have people follow up within my organization and outside. Everybody wants to save the world. Everybody is well-intended. And I work with, the World Bank, USAID, etc. And then everything falls apart because, okay, let's talk next week. Okay, and then we had a little snow in Washington. The meeting was canceled. Okay, and I still haven't had my meeting on, finding financing solutions for Africa, etc. So follow-up means, build your contacts, of course, and use those contacts, but also make sure that you follow up, or that if somebody promises you something, that they follow up. Remind them. Make sure that if you pass information to your colleagues that they follow up. You would assume that if you send something like I do to my regional sales managers that he will follow up on the lead I send him. Well, it doesn't always happen. And it's like a big river at the end, it becomes a little string and in the middle of the desert, and then nothing happens. So my advice is be thorough and consistent and have a methodology to follow up. Make a note. I know it's tedious, but put a note to yourself, follow up with this person in 1 week. It will serve you well. It will also reflect positively on you as somebody who's serious and thorough and not just a talker. So if you want to get things done, make sure you not only identify the issues, but that you work on the practical aspect of doing business, which is, doing all of what I described. So I'll pass on now the microphone to my next colleague and speaker.
Philip, thank you very much. And I know personally Philip is the king of follow-up, so he practices what he's preaching here. Herbert Wigway, Group Managing Director at Access Bank. Thank you, Herbert.
Thank you very much. It's very nice to be here, and thank you for coming to listen to me speak this morning. I am the Group Managing Director for Access Bank PLC. Access Bank has subsidiaries across the continent. We are present in 7 African countries. In West Africa, we have a presence in Ghana, we have a presence in Gambia, we have a presence in Sierra Leone. In East Africa, we have a presence in Rwanda. Southern Africa, we're present in Zambia, and also we have a full-fledged bank in the UK. Now, what has driven us from time is the fact that we've told ourselves that Africa can only be developed by Africans. You will see foreign capital coming in, but capital is only looking for returns. And so if you really want to do anything interesting and you're looking for where there are significant growth opportunities, I think the best place to be is to be in the continent. Now, earlier on in the day, I had people talking about capital deficiency or capital deficit, skills deficit, etc. I think once you have the right people with the right skills who are sufficiently passionate, most of those things are not as serious a problem as they may appear to be. And the reason I say so is that I use my own example. Before we got into Access in 2002, we used to work for an entrepreneurially run bank. And so we are used to working in institutions that are like a blank piece of paper and start to grow. When we got into Access, I'm sure the capital of Access would not have been, at that time, more than $20 million. And we started to build on it, and with everything we had and the skills that we had the opportunity to stay out here and work for great institutions here, but we told ourselves, where else can you make a real impact? Where can you create a true oasis of sanity? Where can you find economic shifts as dynamic as you would find in Africa? Nowhere. So we went back home and we started to build this bank. Today, we have about $2 billion in capital. We have 7 million customers. We have 1,500 ATMs, several things, and we can go on. But more importantly, we've realized that investing in people is the most important thing. And what we've told ourselves is that all access people will be able to stand alongside their colleagues in other world-class institutions, whether it's Goldman Sachs, Salomon Brothers, whatever it is, same level of skills. And so we've invested in a world-class training center, which churns out every year anywhere between 500 and 1,000 people who come back home to work. But I'll tell you what we've achieved. We think today we've also created yet another oasis of sanity in Nigeria. And so when people come to Africa and say the corruption index is high, yes, you could find it high, but there are some institutions that follow best practice and do things in the way they ought to be done. It's not easy, but you can do it. And because that is the only sustainable way to grow a business. We've also seen and supported African businesses to grow. I recall 10 years ago when we were trying to do something for one of our clients, who today is a global name. Putting together what was $1 billion appeared to have been an impossible task. But last year, giving him $13 billion was not a problem. It was done from the comfort of our offices. And so institutions are growing. Access to capital is getting better and better and better, you know? And the same thing is happening at the retail end. So we have small entrepreneurs, female entrepreneurs who have been disadvantaged for a while, by the way, all right? And we're supporting most of them grow because they are truly the future for our continent. So in a nutshell, several great things are happening in the continent. If people think that sitting out here is what can change Africa, it will not change Africa. You have to come back home. You have to come back home. You can carry an American passport, but you are not American at the end of the day. I mean, it doesn't matter how hard you try. And where else do you see that great potential for growth? It's back home. I have my children going to school out here, and I speak to them a lot of times, and as well as their friends. And I encourage them to come back home. It's not just every vacation, as often as they can come. Let them understand and be on ground. Otherwise, what you find is when you come back home, you say you're Nigerian, but the locals just eat you for breakfast, you know? So you need to come back home and do great things. And we find several great entrepreneurs across the continent. You find them in Uganda, you find them in Kenya, you find them in Ghana, no matter where you go to. Now, it is true that there are infrastructural challenges, but guess what? Therein lies the opportunity. Those are true opportunities for most of you who have already built the network out here. I don't want to take much more of your time, but let me just say that we have also spent a lot of time in ensuring that we are the champion of sustainability in Africa, in the continent, particularly for women. What you tend to find is that in several parts of the continent, it's still a male-dominated society, but we are beginning to change the overall thinking of the continent and creating ways in which we can support female entrepreneurs, let them have as much access to capital as their male counterparts. So those are the things which we're doing. Thank you.
Thank you. Thank you for the introduction from each of you. Now, a few questions, and if you'll respond in 30 seconds or a minute, please, we'll run through a couple, I hope, provocative questions. So each of you are experienced in one way or another. You're deep on the continent. I'm interested to know, you're in front of a minister of finance. We don't have to name a country. But you are keen to grow faster, and there are some limitations in that country. what would you recommend to the Minister of Finance to really raise the investment potential and attractiveness for your growth, please? Dominic, could we start with you?
Okay, thank you. I think on the insurance space, what I'd request the Minister for Finance to do is to come up with regulations called local content law, which requires that any insurance company placing, any company that wants to place a risk should place that risk in the local market before it's exported. Now, Nigeria has got a law, which I think was enacted about 3 years ago. It has helped the insurance industry to grow on the back of oil and gas, because in most of the African markets, oil and gas insurance underwriting is exported offshore, and most insurance companies, they just front those risks. So if there can be a law that makes it mandatory for local capacity to be exhausted, it's going to ensure that the insurance businesses develop much, much faster. So that's one way, regulations, and I'm sure there are others. Yeah, thanks.
I think clearly infrastructure is a challenge that the private sector can address in partnership with governments. Governments need to take the lead on that, and it starts with electricity. There needs to be a consistent amount of power supply in these countries. The likes of General Electric in the United States have been very much front and center in trying to partner with governments like Nigeria on that particular issue. There's also a need for clean water consistently. We see that across a number of our projects in Africa. There needs to be better road transportation in order to allow for the build-out of a cold chain in the food and agribusiness complex. If we can't have access to roads and railways, we can't reduce about 75% of food which spoils before it ever gets to the consumer. That's the reason why in Ghana your fish costs more than it does here in Boston. It's the reason why in Kenya KFC and Yum Brands pays the highest price for poultry globally for their chicken. Those things have to get addressed, and to do that we need support from the likes of these various ministers on infrastructure.
Personally, though I don't like the intervention of state, sometime you may want to have the government provide some financing when the private sector is missing in action. In agriculture, access to financing is very challenging. So I would say creating a system whereby smallholders, farmers can have access to financing would be key. I mean, we heard this morning Ashish, who started with $5,000, and we know all about how a cell phone have been empowering a woman in Africa where they have one cell phone, they get paid for letting people use it, and then they buy a second one and so on. So it doesn't take much to get people started. So I would say put a little money. It doesn't have to be, you know, I'm not saying that each country should put like $1 billion aside, but, you know, start even with 10 million. That can transform the life of many people, and it could be a good way to get started.
I think the private sector can do quite a bit, and if I was sitting in front of the Minister of Finance, as I've done several times in my life, the first and most important thing is about creating the conducive environment for the private sector to thrive. And so, for instance, the right tax regime is critical so that we can lend to priority sectors of the government. All right. So, for instance, if you want to support agriculture, you must create the right incentive for people to support agriculture. And one way you can do that is through taxes. Same thing with infrastructure and all of that. Now, if the private sector is supporting all of those priority sectors, what you tend to find at the end of the day is that it will always lead to significant growth in your GDP, all right? But if government is not paying attention to those kind of details, like the right fiscal regime, you would have a problem.
Thank you for those comments. We had a very provocative introduction to our session, and I'd be remiss if we didn't put out here some of what may have brought you in the room. We had words such as, is Africa facing a catastrophic post-bubble consequence? And is it fickle investment? And are the returns going to fall short of lofty targets? I actually had to hide my head when I was reading what we were going to be talking about here. It's pretty scary stuff. But here we sit, having heard Ashish this morning and each of you. So would you just take a few moments, please, and lay out your response? Is Africa a hot trend that's going to fade away, or is Africa a viable long-term investment? And what do you predict in each of your industries, please?
Okay, thank you. Now, my general view is that Africa is a long-term play. Now, if you look at the trends in Africa, and I think they've been mentioned, there's a lot of work by McKinsey, the World Bank. In the next, by 2040, 1.1, the population of Africans of the working age will be about 1.1 billion, which would be one of the largest in the world. The economies in Africa are growing very fast, one of the largest, fastest growing economies globally, between 4 to 6% real, rate of growth annually. The consumer spend is increasing, at a very, very large rate, etc. So what's happening is there's a lot of demand which is being created with a large segment of the population going middle class, with incomes rising. Demand is created across different, different industries. So the issue is if investment goes to the right productive sectors, if those investments are going to go to businesses which will help those businesses succeed in offering products and services that would address the demand, then it would be the right investment. Yeah. But if the investment go to let's say sectors which are hot, like overpriced property, then it would be a problem. But so long as the investment is channeled in the right productive sectors, I think over the long term, investors will be definitely yielding those investments will be yielding very strong rates of return. Yeah, thanks.
So, as I sit up here, I'm not African, and you must be wondering, how much credibility do I really have on this subject? And I don't know. I'm not an expert on Africa, as many of you are. I did realize this morning when I tried to pay for my taxi that I only had 3 currencies in my wallet. All of them were African, and I had no U.S. dollars. So if that says anything, I'll start with that. I think one of the things we try to apply as we take lessons learned in global emerging markets, and we're a big investor in China and India and Latin America, and now moving into Africa, where Cargill's been for almost 30 years, more than 30 years. We're trying to take these paradigms and figure out what is applicable to certain of these African markets and what is very different, and therefore no lesson can be applied. As we look at the food industry, one thing that you can consistently fall to is that when there is a demographic dividend, it results in increased consumerism. There's a rising middle income. When there's a rising middle income, there's urbanization. When there's urbanization, you get more convenience foods. These themes are consistent in the development of economies around the world, and we think this is the story that will play out in Africa. Now, the challenge is Africa has 60% of the world's arable land, but it's still importing about 40% of its own food needs. It has to be able to feed itself, and then it needs to be able to feed the Middle East and probably most of Europe. So there's a tremendous opportunity here as we look at the continent in a variety of different zones for production, each of which has comparative advantages in its own way. And our challenge is to figure out how to match an entrepreneur, a small business, with equity capital, the right strategy, the right long-term thinking to win in these markets, because we think the real story here is not about winning in Kenya. It's about a Pan-African strategy that will end up feeding a much broader part of the world. These opportunities begin at the front of the supply chain. There is a huge opportunity for yield improvement. That's seeds and fertilizer. Some of that will come when policy is more consistent between GM and non-GM food categories. There's an opportunity to raise maize and soy yields substantially. And when that happens, then animal feeds can be cost competitive. When animal feeds are cost competitive, you can talk about having proteins or other human foods that are also cost competitive. There's an opportunity to secure the food supply chain. So the challenges we talk about when we think about food insecurity or the lack of food safety that exists in Africa, that's an opportunity as we see it. We talk about moving subsistence farmers into commercial farming, but it's not an either-or. There will always be room for a solution that involves the smallholder, while at the same time finding an opportunity at scale for companies to come in and build something different. There's an addition of value that needs to take place on the African continent. Too much in the past, the focus has been on exporting natural resources out of Africa. That's been the story across a variety of mineral categories and energy commodities and ag commodities. We see the opportunity to add value on the continent that will employ more people, that will increase incomes. That's a virtuous circle that will allow for more spending on local food that's produced locally.
My take on Africa is that it's not the next bubble. A bubble is something that happens when everything is based on nothing tangible. Africa and each country is growing and has tremendous growth potential. Also, things are changing. The perception of each country is changing over time. Each country has been building up their credibility over time. And 20 years ago, I would say everybody was looking at Africa like a place where you provide assistance and that's it. And now the perception has changed. We go to Africa to find partners and to partner with solid partners. And you can find that throughout Africa now. As for us in agriculture, and by the way, agriculture is sexy. Some of you may be like, oh, agriculture, I'd rather sell IT equipment or go into fashion or so on. I'm sorry, agriculture is the basis of life. Without food, you don't live. So you sometimes have to focus back on the origin of everything, access to water, access to food. The population will increase by 2 billion by 2050. The need for food will grow by 70%, and we'll need to produce that food on the same amount of land or even on land that is diminishing by 2% every 10 years because of global warming. Which means that Africa is the next, how can I say, West or El Dorado, because there's a lot of unused arable land. And if properly managed, I think there's tremendous potential, and Africa can become the next, how can I say, food safety net for the world as we are facing global challenges.
I think Tim spoke a lot about the opportunities in Africa, and then Philip has also built on it. But somebody who has spent all his life in the continent, I can tell you that truly, the continent is poised for a major, major growth. Now, right after the bubble that happened in 2009, I think the rate of recovery must have been faster than anywhere else. We spent time there. We saw how the financial services sector recovered and all of that. I also have, reason to be out here in the States very often, and I found out that the rate of recovery was certainly not the same thing. So in terms of where is the growth coming from, it's going to be Africa. Now, you've heard of the population growth, which we're expecting to see. Given our growth rates, we are likely to see our population grow from about 1 billion people to what, 1.8 billion over the next 10 years. GDP from $2 trillion to $2.8 trillion, et cetera, et cetera. These only just reflect the enormous potentials in the continent. Now, for us as an institution, we've also seen how these things can affect you positively. When MTN first came to Nigeria, for instance, the expectation was that it was going to take them 5 years to break even. Their initial calculations as to GDP per capita or income per capita and how many people can buy mobile phones totally faltered. Today, you have about 80 million lines in Nigeria. You ask, how are they paying? They are paying for it, and MTN in Nigeria is perhaps bigger than any other part of Africa. And apart from that, if you put it together, if you go to Asia, it's bigger than a lot of parts of Asia. So it just shows the enormous potentials. Now, the truth is that most of the economy, all right, is not truly reflected in the numbers, because what you see in the informal economy is perhaps just about the same size, or in several cases, larger than the formal sector. And so that is why a lot of people say that, oh, we don't see the potential. Now, Nigeria, having rebased its economy, for instance, is now a $500 billion economy. Now, what does that mean? It has not changed anything. All it's done is to show people the real potentials coming out. The truth of the matter is that, quite frankly, there's no hot trend. What you see is that generally, all right, you would see dollar for dollar greater returns in the continent. However, you need to make sure you pick the right partners. You need to understand the right sectors for you to do the investment. But generally, I think that's the next frontier for growth.
Okay, I'd like to invite you. Please come to the mic with your questions. We've got extraordinary expertise here and some very practical views of how to move forward. As you make your way to the mic, when you come forward, would you keep your questions short? try to limit your own commentary. And if you want to address it to a specific person, go ahead. Otherwise, we'll run the table for each person. You, sir?
Sure. My name is Ronnie Mayanja. I'm originally from Uganda. I'm a journalist by profession. I actually have one for the gentleman from UAP, and then one from the gentleman from Nigeria, if it's okay.
Could you speak up just a little bit closer?
I said I had just about 2 questions, actually, and then one was a comment. One, the gentleman from Kenya, I actually put together Business Expo in Boston. I'm actually now in the real world, basically trying to put some of my skills to help my people here in the diaspora. And we invited the UAP country manager from Uganda because we feel that there is a big presence of the diaspora here and there is a need to tap into the insurance. Of course, they didn't see the value in actually being able to come down here and pretty much get the diaspora involved. I wanted to find out from you what sort of plans, if any, UAP has in terms of trying to attract, diaspora insurance and making sure that, because we have quite a sizable number of East Africans, Kenyans, Ugandans, Tanzanians living here who actually want to tap into insurance back home. The other question is, if possible, we have another business expo coming up in June, on June 28th at the Burlington Hilton. What, if any, support can we be able to get in that regard? And then the gentleman from Nigeria, it's very good that Nigeria's economy is one of the fastest growing in our region, basically. But what kind of messages does things like President Goodluck Jonathan firing his central bank governor send in terms of the confidence the world should have in Nigeria in terms of investment? Because we know that he seemed to have been a whistleblower when 20 billion disappeared from the government reserves, but all of a sudden, he was fired after that. So from some of us in East Africa, what do you think that sends in terms of a message on the continent? Thank you.
So, Dominic, do you want to respond first to the
Yes,
question of diaspora?
yeah,
Thank you.
Thank you very much. Now, we do have a diaspora strategy. Last year in December, a team from Nairobi traveled to Texas. They attended a couple of presentations, targeting the community of East Africans living in Texas. Now, what we've decided to do is, instead of just targeting Ugandans, targeting Kenyans, UAP is a Pan-African group. So what we'd like to do is to make sure that the diaspora strategy, makes sense for us. And the way we intend to approach it will be, we look for events like the one you're organizing, where we can bring on board people from Uganda, East Africans generally, or even other parts of Africa. So now we can offer them as UAP we can tell them as UAP what is that we're offering them. So yes, we do have a diaspora strategy. We're very, very keen to engage and to help a lot of the Africans in this part of the world to actually access financial services, including insurance. Now, I just want to make 2 more points around the demand for services. And I'm just going to give my own example. I mean, I flew all the way from Nairobi, so I think it's important just to share with you. Medical insurance. In Kenya, we have a population of 40 million, of which only 500,000 have got medical insurance. Now, last year, our medical insurance business grew by 58%, one of the fastest growth. Another example is the formal market. The formalized market is 2 million. The working population, the formalized market in Kenya is 2 million. We have about 41 insurance companies. Most of them operate in that space out of a population of 40 million. The decorporatized market, that's the informal market, and others, people work in informal jobs, small businesses, is about 8 million. Now, the biggest challenge we face is that out of the 8 million people in the decorporatized or the informal market, they don't have access to financial services. So the big challenge to groups like UAP is about relevance, to make sure that our business model is relevant, the products are relevant, so that we can actually increase the reach. So going back to the question, where's the opportunity? That's where the opportunity is, making sure that we innovate our business model to tap into market segments where there's big opportunity. The final one is around bottom of the pyramid. Nobody focuses on the bottom of the pyramid. There's a view that the poor can't afford insurance. I mean, the poor need medical insurance as well. And you'll be very surprised. They need medical insurance. They need to save for funerals. Now, the biggest problem with the informal market, in our view, is that there's a market failure problem. The model we use, model for the middle market, can we now then create new models to capture the bottom of the pyramid? I think we can. I think yesterday I spoke with the head of MIT in Africa, and we're very keen as a group to collaborate with MIT on the innovation front. We're starting an innovation center, and we'd like to partner to see how do we start getting insights on how we can penetrate this huge market segments. Thank you.
Thank you, Dominic. Herbert.
Okay. Our democracy is evolving. That's Nigeria. And in the course of evolution, certain things happen, certain institutions will be challenged, certain processes will be challenged. The most important thing is that over time, if those things prove to be resilient, all right, they become a way of life. Now, obviously, politicians are different from from private sector people or technocrats who run the central bank, and so have their own way of thinking. But what is most important to us is that the central bank is a very robust institution, and it's not made up of just one person. And so the decisions taken at the central bank are collective decisions. And so the central bank governor, who is currently on suspension, the fact that he's not there does not mean that those policies are not being pursued. They're being pursued, all right? And so if in 2 months' time the allegations that were brought against him are shown not to be true, he will be vindicated, all right? But the most important thing is that we have a system which is going. At the macro level, we continue to record some of the highest growth rates ever. It is true that there are fiscal challenges, as you would find in every developing country. Those challenges do exist. But what you find is that as our democracy is evolving, people are challenging some of the issues or some of the questions being raised by the existing government. And that can only create a more mature institution over time. All right, so in a nutshell, yes, it is true that the wrong signal may have been sent, but I think what has been proven after that is the fact that we have a robust system back at home.
Thank you both. We have another question on the right, and anyone like to step to the microphone on the other side of the room, you'd be welcome to. Go ahead, sir.
Yes, my name is Ezekiel Luhigo from Tanzania, part of the East African Business Council. This question is for Mr. Philip from the Argo Corporation. I just wanted to know, in Tanzania, the government of Tanzania has been working to promote agriculture and have tax exempt for all anything that has to do with agriculture, and also trying to promote foreign investors by giving them 5-year tax exemption when they start, their business in Tanzania. So I was just curious as far as Massey Ferguson. I know I've seen that name and those, tractors for a long time. So I don't know if there's any plan in the near future with those incentives that are made by the Tanzanian government for, your company to think about either, starting a factory or, trying to invest heavily in Tanzania so that, your company can grow, but also the local folks can, get advantage of your products.
Thank you for your question. I think it's a very good one. I am aware of this. I would say this. We have a distributor in Tanzania, so that's one way we go about doing business. About setting manufacturing, that is a good question. Every country comes to us and say, why don't you set up manufacturing? And then they say, we have a free economic zone, and you're tax exempt for 10 years, and this and that. But I'll be honest with you, every country comes up with a similar program, come in, everything is going to be good. So where do you go at the end? For manufacturing, you have to understand, manufacturing only makes sense if you're going to have sustainable volume over time in that country. Then people say, well, you can export in the neighborhood. If you're going to set up some investment in a country, you first want to make money in that country, and then you can expand to other countries. So we're not going to go to Tanzania to cover the rest of the region just because Tanzania is offering a good, program, etc. Also, another practical thing which I didn't know when I started ACO, but now I realize, manufacturing is complicated. It requires a lot of skills. It requires also a network of suppliers. And the question is such a network of suppliers present in Tanzania in manufacturing? That's not necessarily the case. So in the end, does manufacturing in Tanzania make sense? Not necessarily. You have to think, does it make sense more to have manufacturing in Tanzania and create a few jobs? Or does it make more sense to import into Tanzania and allow more farmers to have access to mechanized solutions so that they can make an income and contribute to the country? Those are the things to think about. So to conclude, I'm aware of those measures. It's a good step forward, but I don't think manufacturing will be the first step. The first step would be for us to try to sell more in the country, and if the volumes justify it, then we would consider doing what we call PKD, like partially knocked down thing, meaning we bring equipment into the country, we assemble it locally, and little by little we would incorporate local components.
Tim, since you're in the ag space as well, without talking specifics on countries, I'm interested with the fund that you've launched. Might there be specific filtering criteria, tax incentives, free trade zone, joint investment of some source, collaboration? What kinds of things might you look for as you're looking for those forward investments?
Yeah, I think these things do help, right? They do provide confidence to an investor, but generally they're not moving the dial, right? I need to produce EBITDA. I don't care so much about what the tax difference is between 20% and 25%. The bigger issue for me is what's the market? What's the strategy? Is this the right place for the next 10 years or 30 years or 50 years? So a short-term incentive, like Phil's talking about, where you get some tax break for 5 years, on the margin that may make a difference, but it doesn't actually sway you to choosing one geography or another.
Thank you. Let's go ahead with the question here, please.
Hi, my name is Chidube. I'm from Nigeria. I went to school here and I now work in the area. I have a question for Mr. Wigwe. I want to find out how budding entrepreneurs who have little more than a vision can get access capital from your bank, especially if these entrepreneurs don't have collateral.
You know, in truth, when you want to start a business and you have nothing but ideas, it's usually venture capitalists who support you, because the rules supporting banking are such that, by definition, 8 out of 10 of those deals actually go bad. However, we've also seen people who've come out extremely passionate and who understand what they want to do and are very clear in their thought process, who've come up with ideas to the bank, and we have basically sat down with them and come up with the right structures, all right, to support the ideas. A lot will depend on what you're doing, okay, and what product or service you will be rendering. I'll give you an example. It must have been 15 years ago. 3 gentlemen who had just finished their youth service decided to set up a business in Nigeria. One of them was French, the other two were local. And it was a logistics business, and all they were going to do was basically help to minimize transportation costs, minimize turnaround time from when you order your goods until when it basically gets to your manufacturing plant. They didn't have any type of collateral, but we supported them. Today, that business is easily a $5 billion business in Nigeria. So it all depends on what you're bringing to the table. Some may be maybe so much more risky than others, all right, in which case it doesn't make itself amenable to banking, all right? But those that can be structured properly, you will find some institutions like ours that will sit with you and come up with the right construct that would make it work.
Thank you. Let's go ahead with another question here, sir.
Hi, my name is Peter Smith. I'm with Communities Without Borders. We support 1,500 AIDS orphans and vulnerable children's education in Zambia specifically. And I heard Tim Noonan spoke about Zambia was one of the countries that you're looking to move into in the future, and I'm wondering, and this applies perhaps to the whole panel, if as an NGO, we want to support our students as they finish secondary school and go on to either vocational or university level, acquiring skills that will be useful to them and that might be work toward moving into some specific sector that will be actually happening rather than training them for something that will really be of no use in Zambia. Now, I'm wondering whether your organization is looking at supporting that kind of training in any way, and or if you would be actually doing training as part of your outreach in the countries that you go into, or if any of the other panelists have comments on that same idea. We're actually here today looking for new young Zambian entrepreneurials for our board, but it would really help us to understand how companies were seeing education as part of their investment.
Yeah, a couple of anecdotes in response to that. First, on Zambia in particular, we have a model called Ag Horizons within Cargill, which provides a variety of training and development initiatives to local farmers. These are typically young people or women. It's an idea that originated first in Canada, has been applied in Australia, now in the US, Eastern Europe, and we're bringing it into sub-Saharan Africa, primarily through the south, including Zambia to begin. And the idea is that you can improve yields through these smallholder farmers, and then they're able to hire neighbor farmers and include them in what end up being capitalist model cooperatives throughout the area. Then we were able to originate more of those grains. We're able to add value to them, and then that does result in a higher GDP in that area. So yes, we're going out to the farmers themselves and trying to raise the standard of farming through education. Some of those end up being employees of ours, and some of them end up being suppliers to us down the road. But that's a model that we are espousing, particularly in Zambia. In Ghana, as another anecdote, last year we have one of the largest cocoa businesses in West Africa, and last year we had 22 mid-level managers. These would be people in their late 20s, early 30s, mid-30s. 22 of those managers ended up leaving our operation because there's a glass ceiling at some point when we're not able to grow any further in that particular market. We'd like to be able to take those 22 people and apply them to other markets. So there's also an effort within Cargill to retrain employees who've learned certain skill sets, bring them into new geographies or new businesses in the same geography. Very much a focus for us at the moment.
Philip, do you have just a quick response
very
to
briefly,
that?
since we are at the Model Farm Training Center in Zambia, and since we have limited time, let's talk offline, and maybe I can put you in touch with our general manager in Zambia this week and discuss what could be done together.
Thank you. Okay, we have time for one more question, but we're going to cheat the system. Just give me just a 3 or 4 word question. We're going to take 2 or 3 of you, and then we'll play all 3 answers back, please.
Okay, I'm Alex from Concordia University. My question is directed to Mr. Wigwe. Most times people target investment in Africa. It's more for the large corporations. So are there any specific programs to help SMEs? And is there anything being done in Nigeria to eliminate the multiple taxation which companies face? Sometimes they're not aware of when they start the businesses.
Okay, we have a question on SME funding, and your question on taxation may be offline. Just a quick summary. What's your question, please?
Yes, for investments that you're considering in either projects or companies, what are your real indicators of an opportunity, and beyond just the broad categories of demographics and so forth, but for a specific company? And how do you mitigate risk?
Okay, so good. A question on risk mitigation as well as broad investment criteria.
Hi. Philip was commenting about some of capacity building processes. For those of us that are operating at a grassroots level, what other initiatives are in place that we could connect with?
Okay, and again on grassroots and how to get connected. So SME, risk mitigation, a broad profile on investment, and connection to some of the social infrastructure availability on the ground. Could we wrap up, please, in maybe just 30 seconds apiece? Sorry to be so abbreviated, but the questions have been quite exciting for us all.
we have a full-fledged division addressing SMEs, and what our belief is that basically SMEs are the future, all right, of the for the country, and it's supported by several types of facilities which are, as far as I'm concerned, subsidized from the central bank and from the Bank of Industries, and also internally, all right, to make sure that they survive. We have several programs to support them and to make sure that we can manage them until they become what we refer to as emerging corporates.
For indicators of opportunities, I would say it's not just indicators, the World Bank reports, etc. It's sometimes an opportunity comes along. We're in Algeria because a delegation met our chairman and there was an idea that made sense and we went with it. We're in Zambia because the government is proactive. We're talking to the DRC because they have a very interesting partnership for business park and agriculture. So sometimes it's just an opportunity and the right timing. And by the way, I'd like to say that Steve Hayes, the chairman of Corporate Council in Africa, is in the room. I would invite you to also talk to him. Steve, can you raise your hand? Thank you.
The last thing I'd say is there's an African proverb that says, if you want to go fast, go alone. If you want to go far, go together. And so what we're looking for in terms of investment criteria is someone who wants to partner, who espouses the idea that global thinking and ideas are democratizing. Yes, you need African solutions in Africa, but there are 1 + 1 can be 3. Our minimum criteria is $10 million of equity investment. We need a 3x return in 3 to 5 years. We're very aggressive in growing the bottom line of a company. So we want to be market leaders in these various geographies.
Okay, just a quick feedback from the insurance space. How do we mitigate risks? As I mentioned earlier, we're currently operating in 6 countries and we'll be moving into other countries. We do have partners that we work with very closely. Being a public company, we already have about 3 PE funds who've invested in us. So that gives us some de-risking, if you like, opportunities. On the real estate side, we're working with a big global institution, that's the IFC, to capitalize or actualize some of the real estate opportunity. Again, it's a strategy to de-risk. We do have a very, very strong enterprise risk framework. On the insurance side, we make sure that we work with big our insurance partners to ensure that risk is spread across. Finally, I think in terms of opportunity, what else do we look for? We do have a criteria for which markets we need to go into. Of course, demographic is the big one because large markets will create big demands. And also the GDP per capita. We've seen some countries where the incomes are rising very, very fast. And because of now the increase in disposable income, our view is that that's going to create very strong demand for financial services, including insurance. So those are the countries that we prioritize to enter as part of our expansion strategy. Thank you.
Dominic, Tim, Philip, Herbert, thank you all for such a rich and informing panel this morning, and thank you all for your excellent questions. It's been a pleasure to be here, and thank you to MIT on behalf of Corporate Council on Africa for coordinating this event.